Okay, I think I'm back on. Sorry, you guys, I don't know what happened there. Um, just wanted to kind of restart the stream here. Okay, so that's off. The chat back in. Okay, so let's discuss GameStop a little bit here. I know there's a lot of people who are talking about GameStop a lot. I get it, but I have some point to put forward here because there's something somebody brought to my attention to this particular website, and I'm like, okay, I need to address this real quick because I think that plays into the negative sentiment that we have surrounding GameStop, right? Now we all know that retail do not move the market, and look at this, okay? If you look at the volume, way up here, now it's down here. Anytime you see low volume and the price come crashing down like this, the same way with the uptrend, low volume uptrend, it means that there's level of price manipulation here, right? I have to say that term because again, there's no reason to have this amount of what is it, dried up in volume, right? There's a lot of sentiment back here, and of course, the narrative was Rowan Kitty, right? He was tweeting, it was whatever, right? I don't know. Again, was he's just here for just a short burst and make money, and then just sell out and move on to the sunset? Of course, I don't know. Of course, like the last time we saw was his position in Chewy, and that was it. The assumption was that he sold GME to get into Chewy. Was that true? I don't know. But like I said before in my live stream, that I don't invest based on Kitty. Okay, I don't care if he sell his shares, right? All 5 million shares, right? And just scroll off to the sunset. Because nothing changed about this company. Right? The sentiment is still the same as far as the company itself. Like the company did not lose billions of dollars during this time. Yes, in market cap, you could say that because the price depreciation is here, right? But again, price is all psychological. It's just currently, I don't know why, I get to buy GME at $21. To me, that's a pretty good price, right? But that's not to say there's a downtrend here. And there's a lot of fear in the market that we need to talk about. And I think it has to do with the bond market, what is happening in the bond market. Remember, people who trade the bonds are smarter than the equity market. That's again, this is just the sentiment across the board here. Okay? Market has ways of, ebbs and flow. We all know this to I guess to eventually find the price discovery, right? For any particular, security, if you wish to say it that way or think of it that way. Now, I know that this company has some value to it, right? Some people want you to believe that it's only worth $9 a share. Okay, I'm willing to go with that. Sure. $9 a share. You're telling me that I could buy this company at $9 a share. Realize what you're hearing right now, because that's straight up cash. GME has $4 billion. $4 billion. Okay? You don't see this one yet because it hasn't been calculated yet. We all know this as an investor. But to the layman people who are just looking at this stat and then they're like, look, it's this, it's this, it's this. They don't know the number yet. You have to wait for the earnings, which is September 5th. One more month, 5 more weeks, That's it. And so until people realize that GME is actually worth more in terms of cash alone, and even then, you have articles out there who trying to convince you that that should only be worth $9 because Ryan Cohen doesn't give you forward guidance. Okay, really? So you're telling me I could buy GME at $9 cash on cash, but one share of GME at $9, I could get $9 back in cash. That's ridiculous, right? To say. But again, that's assuming that you don't think that the company itself, the brand, the proprietary, whatever, the copyright, the trademark, the leadership of GameStop is worth anything. So assuming that's worth zero, then you have that cash position argument here, right? But to me, I think it's worth something, right? At least something. Yes, $1 more. How about that? The company itself, the cash flow and all that stuff, or the future cash flow, I should say, should be worth something. Okay, so let's talk about this particular. Okay, let's see. I don't know. Am I? Yeah, I think I'm on. Nobody just died. I feel like nobody watched it. It's okay. It's life. It's life when you talk about GameStop. You don't get any traction unless somebody is pushing your video and it's like interaction based and all that stuff, right? I mean, Morantz has been doing it for what, 3 years, 4 years of his YouTube career, and it's a grind, right? It's a labor of love here, and so if people don't realize that is not a, it's a jab in the gut. Sometimes if this is the person that you care a lot and they think that about you, it's a tough pill to swallow. But at the end of the day, it's not just a disagreement here. So let's talk about this real quick here. I know I'm just babbling here. Okay, so I know the revenue is down, right? Look, I can't dispute that this is how it is. I don't know how they're gonna fix it, but let's see Q2. In my opinion, the trading cards and all that stuff is going to be served as an additional revenue stream. We'll wait and see. How much are they gonna make? I don't know. We could speculate, right, on the market cap or the overall market of the trading card as a whole. Last time I checked, it was $10 billion market. Okay, so even if GameStop could capture maybe 10% of that market share, I mean 10% off of 10 billion, what is that? What is that? Am I good in math? I don't know. Okay, 10 billion times 10%. That's $1 billion. That's too much, I think. That's too much. So let's say just 1%. How much would that be? It's $100 million market, right? So let's say they pull in $100 million, okay? Divided by 4. Oh, $25 million a quarter, okay? Just from the trading card alone. Perhaps there's more, cost of revenue because you have to buy those cards and then store it and then, whatever. So the cost of revenue might be going up too. So that's something to look for. As far as we know, we wanted to see more gross profit here, less operating expenses, right? Even more. If you look at the decrease from last year to now, it's a lot. $200 million swing here. This is a trailing 12, by the way. And so if you look at this trailing 12 right here, and this is what I want to point out, because this website sometimes, when people are trying to do research on GameStop, they usually use different websites here, right? And I don't know why the discrepancy here. I'm trying to understand it myself here, but from what I'm seeing here, this is the correct one, right? Look at this. So this is a trailing 12 for quarter one. But if you switch it back to quarter by quarter, you would see that if you were to add this, this, and this, and this, it doesn't come out to be negative. So, with that being said though, let me do this real quick because I'm curious myself how this come out to be. Okay, so from January to January of 20, because let's do annual. That's probably okay. So see, even annually, it gives me this income, right? Again, that's annually. So positive 24.9. Okay, but let's look at this website. Okay, now this has been brought to my attention here, and again, this is the source of discrepancy that I'm talking about. So when you see this right here, what is wrong with this? This one number. I know it's just one number, but even this, like, I don't understand how they are calculating this at all. Right? So it says trailing 12, the last 12 months, right? 12, the last 12 months, right here. So if you add the quarters together, just by hand, like, you don't have to even do the calculation yourself here. You could see that it's not negative. See what I mean? It is positive. So I don't know, you guys. Like, this is, again, you have to do your own research. I have no idea how to interpret this other than why the discrepancy, right? I could give you my own assessment on things. I could give you my perspective on things, but if the data is not being provided in the most honest way, how can I use any data to evaluate this company myself, right? I know people love to listen to analysts. People love to listen to other people's opinion, but nobody cover GameStop. And so how can I analyze this company the correct way other than my own assessment on things? So again, please be careful, you guys. Just be vigilant out there. There's a lot of misleading information. And, to be honest, I don't even know if this is the correct one. The only way that I know that this is the correct one is to go to the SEC filing and look at every single numbers. Like, is this the correct one being reported? Is this the correct one being reported? Is this the correct one being reported, right? And I could tell you from my experience following this particular earnings for this company, this is the correct number for each quarter, okay? For each quarter. Now, the calculation, you could do it yourself. You don't need, the calculator or any other website to tell you this. But this is why I contest this type of information, because this is incorrect. If you're telling me this is the last 12 months of this company, then this is wrong. Now, I don't even know what this one is. That's not even the right one. So come on, because last year, if you look at the fiscal year of 2023, okay, let's look at it over here. Annually, okay? So let's do annual. Okay, so this is a trailing 12, right? Trailing 12. Boom. 3 million. Fiscal year of 2024. Currently, it says 6 million. Fiscal year of 2022, 11 million. Okay. Okay, sorry. That's not the right one. No. Sorry. I was like looking at the income. Net income. There you go. Net income. Okay. So net income for the current, like the most current one, see, it says trailing 12, most current one. Okay. 24. For the year 2024, it's $6 million. Last year, yes, look at this. 2023, it's negative $300 million. But what is this? See, okay, so this is moving back to, I guess this is the 300 loss, right? But why is this not $6 million? That should be $6 million right there, right? According to this. So those two numbers is crucial because if you use this particular one, you don't see that GME is profitable. You see how this misleading people? We try to honestly look into this company and really see this. Look, why such a discrepancy? Please, somebody tell me. Because this is ridiculous. I'm trying to show this person how this is being misled. But again, let me show you the calculation here. So this is quarterly, okay? Look at how, calculate this for me and see, and come back and tell me this is positive or not. It's like, how is this calculation comes out to be negative 20 whatever, 29 point, what? And who made this website? According to the latest financial report, trailing 12s are this. What? No, that's wrong. And again, so this is why it's such a terrible thing to even like the price sentiment of this company is going to be skewed. And again, to me, this is an opportunity for me, right? Because I know what the truth is. I know that this company is more valuable than what they're telling me. Okay? It's more valuable. I don't know how to explain it except for, the fact that you have great leadership, you have great brand. Yes, it's a popular brand. It's going to become a popular brand because this type of thing is not going to exit anyone's psychology. You will know what GameStop is in a couple years, 10 years from now, 20 years from now, right? But again, as far as the short-term price action is going to see this, you're going to see this time and time again. Volume, low volume. Now, if you know anything about trading, right? Anytime there's price increase on low volume versus price decrease on low volume, there's tend to be a trend reversal at some point, right? But anytime there's any more volume or any type of increase in volume, even just 10% more, okay, this stock will go higher. I guarantee you. Okay, so you just need to kind of watch out for the trend, right? We know that it is a downtrend right now because of the fear in the market. There's a lot of fear out there, you guys, and yes, it comes from the bond market. Currently, there's a lot of talk about how the 10 years has been going crazy in terms of the price or the rate cut, like scarce, quote unquote, okay? Because Jerome Powell is keeping it at 5%, right? He's not gonna lower it, but for people who've been following what the bonds market is doing, like the 2 year, this is what the Fed usually follow. And so if they're telling you, hey, we're gonna stay up for a little bit, they're gonna try to follow this as closely as possible, right? Because they don't want to rocket the market. But however, that's gonna hit the fan, because usually when you see the 10-year treasury bond going lower in yield, it means that the institution out there, they're happy with the 4% right now because they're not lending to the market. Anything could happen. Any fear in the market is going to cause the sell off. So institution would be happy for 4% right now, because they're not going to risk it. They're not going to risk lending out into the companies out there that are saddled in debt or doesn't able to survive this downturn. So again, the treasury is the best asset class in the world, right? A U.S. Treasury bond is the premium. Of course, you could have your own opinion there, because Janet Yellen has been selling billions, hundreds of billions of dollars every day into the market. I don't know, maybe to try to prop up the rate over here, so that she could prop up the market a little bit here. Now, if there's a lot of supply, right, of the treasury bond, usually what happens is that the rate will be higher. The value of the bond is inverse. So the value's up, the yield went down. So if there's a high demand, then for one, I think if you look at this right here, 10 years, it's an ITB, I think. Let's do this one right here, the easiest one to LT, right? ELT, 20 years. Wait a minute. Oh, bond. That's a good man. 20 years. No. So the government bonds out there are there. I should have it. Okay, sorry, bear with me, you guys. Is it ELT 20 years? Short call volume. What the? Okay, this guy is not good. Hold on, let me look at it real quick here, because I'm curious myself. Why is it not popping up? Okay. TLT, yes, I share. It went higher now. Okay, so that's good. I share. Let's do I shares 20 plus treasury bond. There we go. So yes, so this one has been kind of skyrocketing. Now I have some in this in my 401k. My theory is that it's going to go higher when the bond the bond, sorry, when the yield is going to come down, and it's gonna, in my opinion, it's going to play out that head and shoulder thing. I've been kind of tracking this quite a bit. This is the daily candle, by the way. And so it's very important to follow this. Of course, if it goes up in value, usually this is not good. Not good for the broader market, so to speak. Yes, the yield comes down, but it comes down too steeply, meaning that the Fed will have to cut. Because I guess the market is signaling something ominous here. In the initial scare, in the initial run, right, for the value of this particular bond, again, it's just signaling that the flight to safety, so to speak. It's a term that is used that anytime Jerome Powell is trying to say, hey, we're not cutting rate, we're trying to see any type of data to whatever determine that you are that the economy is, but they always say like the economy is robust, right? Until it's not. And then you just see the crash going so quickly that you will see your head spin, right? And then you're going to see your value of your dollar. If you only carry or care about the value of your portfolio, that's all. That's all you're going to care about. But for me, again, shares is a value at some point, right? Because if rate is low, that means the inflation is going to be higher. But temporarily, obviously, I think that the bond is going to run quite a bit before the rate cut. This is just people front running the Fed or try to front run the Fed, right? This could also come crashing down when the Fed was like, hey, we're not lowering the rate, but we're going to higher it, right? We're going to raise it. I don't think that he's going to do that. But if he does, that's the only way that this particular bond would go down in value again. But it seems like this is the run for the bond. Like TLT is a 20-year treasury bond. This is again flight to safety. Currently, it gives you around 4% or so, a little bit above the 10 years. So, yeah, that's usually a good thing. Okay, because the higher yield, like the longer you lock your money, it should give you more money in return. But it seems like because the Fed is trying to meddle with the bond, right? They're trying to give you more on the short-term one, 5%. So of course people are gonna try to get that 5% rate as as much as they can, as long as they can. Now if the Fed is forced to lower the rate at a very rapid pace, people are gonna fly to the long-term bond, right? Long-term one, because they pay more in yield, and they're gonna lock that value for 20 years. Not just because it says 20-year. Let's say you buy into those bonds, it doesn't mean that you're gonna have to, wait 20 years for you to get out. You could get out at any time. You just sell it to the next person, right? So therefore, this is why the value of the bond will go up in value. And this is, again, the safest way to play the market if you don't know where to put your money. And this is what institutions do, like bankers and people who are looking at risk and they don't want to risk it in the market, rather than lending money to some company that may not be able to survive this downturn. Because look at the earnings, like, the revenue kind of like drying up. People are not buying stuff anymore. They don't have the money to spend. People are, again, discretionary spending is not there. Job loss, you saw Intel in, laying off people like crazy, right? So keep in mind those type of news will affect the way that people think about, okay, I need to kind of fly to safety here, right? An institution is the one that usually know that ahead of time. And this is why you see the 10 years going crazy. Usually that's what they're going for. Um, let's see. So I think that's all I have for you guys. But and to me this is the reason why I study the bond market as well. It's because Brian Cohen is in the treasury bond right now. Why do you think he's in the treasury bond and not in the market at large? Why do you think there's no talk about, or at least the appearance of not moving anything or doing anything much, but just sitting tight and wait for the market to tell you what is the direction, right? And so I really think that he's waiting for Jay Powell to cut the rates, and that's when he's began to deploy that capital. But rather than just deploy it right away, you could also buy a long term treasury bond here. You don't have to lock it for 30 years per se. You could just buy a liquid asset like TLT, right? And you would mimic that 20 years and you still appreciate in price as well. So GameStop or Brian Cohen could play that way as well, just to gain some of the value instead, and on top of that you get the percentage wise too. So again, if this head and shoulder pattern plays out, you're gonna get 30%, 33% from here, right? So yeah, that's all I have for this one, you guys. I know I'm a bit kind of flustered here trying to explain everything, but I hope you understand something and learn something here. Currently I am trying to trim my position a little bit here, because if you look at the price action, I went too heavy, you guys. I went too heavy. I mean, not like over leveraging to the point where I could get back, but so when the price was at 30, I bought a call that was a strike price of 25. And I keep adding. Again, day at a time, I thought, okay, if it goes down to 22, it's okay. And so what happened was, like, the price just keep coming down and I couldn't hold it any longer. So I did sell, but I was offsetting my loss using doing my Pullman cover call. Okay. And so the loss is not that much. It's just a small amount of loss. But I'm trying to deleveraging myself even more. Currently, I still have the $20 strike price. And I did kind of like averaging down again, but I'm going to try to trim it off tomorrow. What I'm expecting is this, that it's going to come up with that gap deal right there, right? That gap is always my point of reference here, okay? Because it is the easiest thing to spot. And usually for Jimmy, it fills the gap. It always seems like it is happened that way. So this one right here, that gap, I feel like it's gonna fill in the next couple of days before earnings. And now I still have this right here to kind of signify maybe something is happening in the mid-August, right? I don't know if that's true, but if it's not, maybe another week of downturn again due to the market fear, uncertainty. If the bond market's going to go up again, that's also going to cause some havoc over here. Now, I'm also looking at this price level right here because I feel like that's kind of mimic the mimic right here. Let me show you. Again, just because it happened before doesn't mean it's gonna happen again. So be aware of that as well. So this drop right here, kind of mimic what this is too, right? that fractal again. Again, it's not perfect, obviously. So if that's the case, then when it hits 17, you know that is the signal to buy. I know as an investor, we're salivating at this price point right now. We are. Trust me. We only want to buy more, right? But anyway, so in my trading account, I'm going to have to trim some of my position here because I think, I did some trimming already. Like I said, I sold the $25 strike price for a portion of loss here. And then tomorrow, I might have to sell at the $20 strike price at a loss as well. But I'm considering doing a Pullman covered call on those. I'm still not deciding yet, but if it quickly stay above here and bounce off of the 20 real quick, what I might do is just do the Pullman covered call strategy and wait for the next 2 weeks to see what's happening. Again, if it comes down to 17 and stay there for a little while before it goes up again, I'm all for it as well. I'm all about accumulating more shares, but I feel sorry for people who bought it at higher because I don't know. Again, hate to influence people to do that, but you got to know what you get yourself into when you get into this particular company. I explain it to people at large to please be cautious, okay? Know what type of participant you are. If you come here for the gamble, know that that's the risk. Volatility, right? That's what you're here for. And also, if it dropped down, it's dropped down steep, fast. If it goes up high and fast as well. So, again, have your own strategy. I have mine. I still have my long-term bag here, my moon bag, coin it, my moon bag, and then also, a trading account as well. And that's why I don't feel like I'm missing out on anything, right? I get to trade still and I get to hold it for the long term. And if that quote unquote MOAS is happening, that amount of shares that I have in my moon bag is plenty for me to retire off. Okay. But if not, I get to hold GME for the long term and for the long-term growth of this company, really, right? So again, be vigilant out there. Look at the data in which you are getting from. I don't trust this one now that, I see the discrepancy here, the misleading part, trailing 12. What does trailing 12 mean? Look at this. The last 12 months. If you add these last 12 months, it's not in the negative. So please do your own research, do your own calculation, because it seems like at some website is misleading you. All right, guys, that's all I have.